Warren Buffett. You think you know him, right? The friendly grandpa from Omaha, sipping a cherry Coke, telling everyone to just be patient. But here's the thing, behind that cozy image is a much more complicated, and frankly, a much more ruthless story.
So, that's the big question we're tackling today. Who is the real Warren Buffett? Is he the guy the whole world adores, or is he someone else entirely? To figure that out, we've got to peel back the layers on his two completely opposite identities.
See, on one side, you've got the corporate raider, a stone-cold activist who'd buy a company just to strip it for parts. And on the other side, the Oracle of Omaha, the world's favorite investing grandpa. It's almost impossible to believe these are the same person, but they are. And the journey from that guy to this guy is the real story here.
All right, so let's get into it. To really understand this transformation, we have to go way back to the beginning, to a strategy that was so effective and so cold-blooded, it basically defined the first chapter of his career. It was called cigar butt investing.
Yeah, this first phase of his life is all about the art of the liquidation. It's nothing personal, you know? It's just pure, unemotional math. Find something on its last legs, squeeze out every last drop of value, and then just walk away. And the name, it really says it all. Imagine you're walking down the street and you see a cigar butt someone tossed away. It looks pretty gross, right? It's discarded, but it's still got one good puff left in it. And that last puff? It's free. That was Buffett's early playbook, finding a failing company that was so cheap, its physical stuff was actually worth more than the entire company.
And how cheap are we talking here? I mean, this is the crazy part. Imagine finding a company that had $30 million in cash with zero debt, and you could buy the whole thing on the stock market for just $20 million. You are literally buying a dollar for 67 cents. It's basically a license to print money.
And the process he followed was brutally simple. Step 1, find that dying business. Step 2, buy up enough of it so you're in charge. Step 3, force the management to sell everything, the buildings, the machines, all of it. And then, Step 4, collect the cash and move on to the next one. Rinse and repeat.
For years, this system was almost foolproof. It was all math, zero emotion. But that cigar butt strategy, the very thing that made him a millionaire, was about to lead him straight into a trap, the single biggest mistake of his entire career, a mistake that would change absolutely everything.
And this is the turning point in the whole story. This is where a massive failure and some incredible wisdom from his partner Charlie Munger would accidentally create a masterpiece.
And here it is, straight from the man himself. His big mistake was buying a failing textile mill called Berkshire Hathaway. He knew it was a terrible business, a classic cigar butt that was about to burn out completely. But it was just so cheap, he couldn't help himself.
Well, you know, the problem with a cigar butt is that last puff eventually turns to ash. And now he was stuck with this doomed business that was just gushing cash. The old strategy of just selling it off for parts wasn't going to work this time. He was trapped.
And this is where his partner, the legendary Charlie Munger, steps in with this piece of simple but just profound wisdom. He basically told Buffett, look, even the best jockey in the world, that's you, can't win a race if you're riding a dying horse. The quality of the business itself matters more than the genius running it.
This led to a complete revolution in his thinking. See, the old Buffett was always hunting for mediocre companies at dirt cheap prices. The new Buffett, thanks to Munger, would now look for fantastic companies at just reasonable prices. It was a total 180. Stop picking up cigar butts and start buying diamonds, even if they aren't on sale.
But look, a new philosophy is just a bunch of nice words until it gets tested by fire. And in 1991, Buffett faced the ultimate test, a crisis so massive it almost took down one of the biggest firms on Wall Street. This is where his old ruthlessness became a new kind of virtue.
The situation at the investment bank Salomon Brothers was an absolute catastrophe. I mean, traders had been caught rigging U.S. Treasury bond auctions. The firm was under federal investigation, clients were running for the exits, and the company was literally days, maybe even hours, away from total collapse. As one of the biggest investors, Buffett had no choice but to take over as CEO to stop the bleeding. But here's the crucial difference. The old Buffett would have seen this mess as a perfect chance to liquidate everything. The new Buffett, he had a completely different mission. Save the company, save the jobs, and save its reputation. And this just perfectly shows his transformation. He got all the terrified employees together and he laid down the new law with this one terrifyingly clear statement. This wasn't about profits anymore. This was about integrity. Period.
So he took that same cold-blooded, mathematical focus he used to use to liquidate factories, and he aimed it at a new target: corruption. He fired top executives, he handed everything over to investigators, and he demanded total honesty from every single person left. He saved Salomon by being just as ruthless about ethics as he once was about profit.
So what's the big lesson from all this? What's the final verdict? Well, it's a philosophy that he had to learn the hard way. A philosophy that's the total opposite of the get-rich-quick culture we see everywhere today. You could call it the Nebraska way versus the Valley way. Buffett's hard-won belief in real, tangible value is the polar opposite of that fake-it-till-you-make-it mindset. His entire worldview isn't just a way to make money. It's like a built-in fraud detector, and it's perfectly tuned to see right through a story like Theranos. Just look at the pattern here. It's a textbook of hype and evasion. For someone like Buffett, these aren't just little problems. They are massive, screaming red flags. The stories kept changing, there were no real results, and anyone who asked tough questions got pushed out. These are all violations of his core belief. You deal with reality as it is, not as you wish it was. And this really puts the two worldviews side by side. The Nebraska way demands proof. Show me the numbers. Show me the real value. The Valley way, it just asks you to believe the story, to trust the hype. One is grounded in reality, and the other, well, it's often grounded in fantasy. So what this all boils down to is pretty simple. Buffett's real legacy isn't just the billions of dollars he's made. It's the living proof that over the long haul, the slow, patient, and honest path, the Nebraska way, actually wins. It turns out character is the ultimate competitive advantage. So in the end, I think we have our answer. The ruthless corporate raider didn't just vanish, he evolved. He learned that the most valuable thing a company has isn't its equipment or its bank account. No, his greatest discovery was that character is the one asset that can never be and should never be liquidated.